Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. I hope Ramadan is going well for you. Alhamdulillah, we are almost the end of Ramadan. Can you believe that? That's absolutely crazy. Subhanallah, it was just like yesterday that we started. I hope you're making most of this opportunity. I hope you're praying Taraweeh. I hope you're praying Tahajjud and making dua for you and your family and everything else. InshaAllah, just make most of this opportunity. What I want to do today is look away from individual stocks. So we're not going to look at individual stocks today, and we're not going to look at ETFs, but we're going to talk about the bigger picture. We just want to have a chat, and I'm going to try to make this video not too long, but I just want to have a conversation about why we are here. First of all, what is the reason that you are watching this video here? Just put it on the comment section for me before we move on. Why are you here? Just pause the video and do that, please. Maybe some of you are here just to see what the video is about, but what I'm talking about is why are you watching this channel, and what is the purpose of you looking into some sort of doing some sort of a halal investment? What is the reason behind it? Is it because you want to build wealth? Is it because you want to live off your wealth later on? Is it because you just want to trade? You want to buy and sell stocks and so on? Whatever the reason is, just put it on the comment section. I would love to know that. So what I would like to talk about today is just to have a quick conversation of, first of all, how I got to this place. Right now, as you can see, this is my portfolio as the market is open right now, okay, on this Thursday afternoon, and is actually just over £101,000. How do I get to this situation, and what's my plan, the long-term plan? Because that's something that we have not spoken about in ages, and I know there's a lot of you that have joined the channel recently, and thank you so much for every single one of you for joining the journey. And so let's get started. Let's talk about this. So what you see right now is my portfolio. This is real money. This is, I live in the UK. I've maxed out my ISA account 4th year in a row, alhamdulillah. That means I put in £80,000 of my own cash, which comes from my salary. I have, I've got a family and I have a decent job, and alhamdulillah, I save like crazy. And we're going to talk about that in a second. We're going to talk about investment and saving and everything in between, inshallah. Okay, and that is hopefully you will walk away from this, maybe a little bit of reminder, and some of you might actually find something useful, inshallah. So for some reason, we all decided to invest in the stock market because of whatever the reason is. And we want to make sure that, inshallah, we continue investing in the stock market, and we want to think about the bigger picture. And that's where I come in. That's what I want to talk about now. So I started this whole portfolio thing a few years ago, about 5 years. I started investing in the stock market about closer to 5 years now. And when I first started, I think 4 years and a bit, I think. And when I first started, it was just to, first of all, I read a lot. I read so many different books before I started investing. I was very skeptical. I was not sure where to start. I was worried about Sharia compliance side of things. And I got to a point where I thought, you know what, let me just start. And I started, alhamdulillah. And since then, I've been in this journey. I've learned so much. And one of the reasons I started to do this is because I started thinking about the bigger picture. And it wasn't for me just to make a quick money. It was just for example, what I would love to do is have some sort of a generational wealth. What I mean by that is my children and their children do not have to hopefully worry about finances and so on. I want to put something in place to help them, inshallah, in the long run. And of course, that start is hard work, but I want to make sure at least I can do that now. So at least I can educate them, number one. And number two, they know what to do. They've got the right education, and they, of course, have a head start, inshallah, because of my hard work and so on. Because my parents did a great job, but of course, when it comes to finance, they didn't do that side of things. So I want to make sure that I'm doing that for my own children. And like I said, I've got 2 children, so I want to make sure that, inshallah, they're taken care of. Now, what you see here is basically, it comes from the Rich Dad, Poor Dad, basically book by Robert Kiyosaki. And this guy talked about this idea of basically the poor will always be poor, and the middle class and rich will always be rich. And he talked about these 3 things. So if we look at it, you probably have seen this. I've done a video on this before, long time ago. And every time I teach young people about finance, just like a financial literacy thing. And when I do it, I always use this to basically to explain to them, because it's quite easy to know this. Now we've got the poor people here. Everyone has a salary. They then use that to pay off taxes, rent, food, transportation, clothes, and everything else in between. They have no assets, and sometimes they might have a little bit of liability, but not a lot, okay? Because they can't afford the credit cards and all of that stuff. So they stay in this cycle. They get paid, they use that money. Then we have the middle class. The middle class get income. Okay, they have a salary, which is majority of us that have went to uni and got a degree jobs. We end up in here. Okay, we end up in this mad cycle. Okay, so we have a salary, we pay taxes. Straight away you get a mortgage, you get a car payment, so you want a flashy car. You've got the credit card so you can go holidays. You might have a school loan payment that you still need to pay universities and all of that stuff, or maybe tuitions or whatever, and that's it. So you've got more liabilities. Liabilities are things that take away money from you, okay? And then we've got assets that give you more money. So we only have one income, so no assets, and we've got a lot of liabilities. And this is where a lot of people are caught up. You want to go to Dubai every week, you want to fly to this and that, you want to buy the latest house, the latest car, whatever. You're not frugal about your money, and you're just going to stay in this cycle, and you're not investing any penny. For that reason, you're going to work until you're 60, whatever, 70 nowadays. In the UK, it's heading towards 70 years of age. And then when you retire, government might give you just handouts that can change depending on them who's in power at that point. And then we have the rich. The rich do have income that comes from rental income. They have dividends from companies. They've got interest. They've got royalties and other things. Some of these are not halal, of course. I'm just going to use it just to explain the situation. So they have things like bonds, notes, intellectual properties, and everything else. They have, of course, liabilities just like everybody else, but they've got mortgages, they've got consumer loans and credit cards. And they're very smart about how they do this as well. So they're very smart how they basically do this. When it comes to mortgage, they might remortgage, and they do this and that to get the lowest interest basically when it comes to the mortgage, consumer loans and so on. But they do have loads of types of income. So that rental income, that dividend, that royalties, that interest, that everything that goes straight into their pocket, and then they pay off just a little bit. Then that money, that dividends kind of gets reinvested. That rental kind of then buys another property, and that cycle continues for them. So they have more money coming in than actually going out, which is basically where you should be. Every single one of us watching these videos right now should be striving to, okay, not get rich quickly or anything like that, but have a sustainable income coming from different sources, from salary, from rental income, from dividends, from other investments that you've made constantly every single month, every single year, coming into your pocket, reinvesting that money and being smart about everything you do. Not here. This is what a lot of us basically, we are in this stupid cycle where everyone thinks they're rich because you have a salary, you've got flashy car, flashy house, and you can't even, if something happens to you today and that salary stops, how are you going to pay for the house, and what are you going to do with the car and everything else? So you really, really genuinely have to be now mindful of this and change your mentality. And now that leads me to investment. Now, of course, you can buy properties if you've got a lot of money. And of course, you need a lot of capital, especially with this day and age where, I don't know mortgages, whether they're Sharia compliant, whether they're not. Then you've got stocks. Of course, they are, sometimes can be very difficult to research about them and so on. So there are, of course, situations where we feel like, we can't do this, we can't do that. But of course, you have to learn and do the research yourself. And what I would definitely advise people to do is start learning about the stock market, start learning about property investment, start learning about these things and start doing it now. Especially a lot of you are very young and watching these videos, okay? Do it. Start now. We start working on basically learning about these things and start investing it straight away. Just buy those Sharia compliant ETFs every single week if that's what you need to. Like if you only have £10 left over after every single end of week or end of month, whatever, buy one of those and just leave it there and let it grow. By the time, I promise you, by the time you're my age, 34, 35, 36, right? Or even basically older, you could potentially have closer to £1 million in the business, in the stock market, if you're smart about it. Right, so now we know this whole thing. Let's now talk about some of the things that I look for, some of the things that you should be doing when it comes to investing in the stock market. Generally, stock market. Properties is a different ball game. So the first thing we're going to look at it, we're going to try buying companies based on the intrinsic value. We're not just going to buy Nvidia because we feel like it's going to the moon. We're going to buy it because we've done some sort of analysis. There are loads of websites that allow you to do this. Okay, you can use Simply Wall Street. You can use a Morningstar. You can use other companies. If you don't know how to do discounted cash flow models, and you don't want to do all of that, because remember, discounted cash flow models, we take in basically current value, the future cash flow of these companies, and we kind of making some sort of a prediction moving forward, and it can be really difficult to do that. So it's really important to maybe use other companies that have already done this research for you rather than just doing it yourself. But the intrinsic value is basically what the company is worth. Don't pay any more than that. Okay, just make sure, because if you buy in expensive companies, they can come back down and you're going to lose a lot of money, and you have to stay disciplined. Okay, right. So the next thing I would talk about is basically margin of safety. Every time you buy stock, if the intrinsic value of that business, I don't know, is $20, just make sure that you pay for 10 or 12 or 15 or something along those lines. Give yourself a bit of room, just in case the stock goes down by 5%. At least you're not losing that much, right? If it costs £20 and you paid £25, come on, seriously. And sometimes you might want to take that risk, and if you do it, just make sure you know exactly what you're basically doing, and maybe just invest maybe 1 to 2% of your net worth, no more than that. But you know, at least you're taking that risk. So margin of safety is always important. The next thing I will definitely do is fundamental analysis. This includes basically a lot of important things. So you're looking at the revenue, you're looking at the EPS, you're looking at all of these things to make sure the company is stable. So is the revenue growing? Is it organically growing, or are they actually acquiring other businesses? Is the EPS growing? Is it organic growth as well? So because some companies will buy back their own shares. When they do that, EPS automatically goes up. Remember that, because there's less shares now out there, which means EPS automatically goes up. So there are a couple of things these companies do to kind of manipulate us. So you have to be careful with that. Make sure the companies have like an excellent free cash flow and all of that stuff. And I'll show you at the end of the video some of the things I look for. Again, I'm going very fast, but there's so much into this. Okay, so think in this way. When you're buying stock, don't buy it because you want to hold it for a month or two. Long term is what you need to think about. Stay patient and be disciplined. And if you do that, you will have absolutely nothing to worry about. And this helps when the market goes down 5, 10, 15, 20, 30% in its space of 2-3 weeks. When that happens and there's red day after red day, the only thing that's going to keep you going is to having patience and be disciplined. Patience means, okay, stay in put, don't do anything, buy more, be disciplined, do your research. If there's quality businesses out there and they've gone down so much, then you stay disciplined, do the research, and if you know they are below their intrinsic values, then halas, just buy those companies, hold them for the long term. But make sure whatever you do, don't rely on just like, oh, buying this week and selling it next week. Don't do that. For me, my normal default is I'm going to hold it for long term. However, some days, some stocks, I'm like, okay, if this stock's not doing what I want it to do, I'm going to hold it for 1 year. And if nothing happens, like 3M, I gave it 1 year, nothing happened. I sold it. I lost a bit of money, £1,500 I lost with that stock. But because it was the opportunity cost, for that reason, I actually took that money, put it into other companies that have gone up so much now. So alhamdulillah, in the long run, I will actually make that money back. But if I still had that stock in my portfolio, I will still be down, and possibly even down further right now, because it's about 90 something right now, I think. Right? Next one is dividends. This is important to me. It might not be important to you, especially if you're starting now and you are quite young and you're thinking about, I'm thinking of income, inshallah. these dividends I've received now, I'm going to reinvest it. Hopefully it will grow, in the next whatever 10-15 years. If you are starting now and you just want to, buy high growth companies, there's nothing wrong with that. For me, that income is important. Okay, like I've always said to you guys, I love having that passive income. So I'm investing in these companies and I'm receiving something that makes me feel good, and that's for me. Again, that might not be for you, but that's absolutely fine. Okay. The next thing we need to look for is a moat. This is something Warren Buffett talked about so many times. This gives you that competitive advantage, okay? Meaning the company that you own will not be out of business because a competitor just arrived yesterday, okay? And this is really important, especially companies with wide moat. That is really good. One of the other mistakes people make, and I still have friends that do this on a daily basis, is trying to time the market. Genuinely, you can't time the market. It's very, very difficult thing to do, and you're better off buying high quality companies on dollar cost average every single week, month, whatever, and just hold them for a very long time. And that's the best advice I can give you. Next one is portfolio diversification, and this is really important. This is something that genuinely helped me a lot, and it still does help me. Now, the reason I've said this is because when you think about what's happened in 2022, when the technology companies were down so much, what went up? All the oil companies went up. Other sectors kind of joined. If there is some sort of a recession, normally consumer staples do well. Normally healthcare companies, the things that we can't, we have to have every single month or whatever, like the things that are important, essentials basically. Companies that sell those essentials do well. So overall, you need the technologies, you need your oil companies, you need the consumer discretionaries, because they do well when the economy is doing well. So companies like Nike and Home Depot and whatever, people will go to Home Depot, buy their product because the economy is doing well. If the economy is not doing well, there's no one is going to buy and basically do up their house or do a new garden or buy new trainers or anything like that, new watch or something. So you need a portfolio that's diversified between stocks and ETFs, as well as, of course, again, if your risk appetite is high, then of course you have more stocks and less ETFs, and vice versa if the other way around. Does that make sense? So so just make sure that you have a diversified portfolio. And then avoiding herd mentality. This is really important. Right now it's happening again, and I see brothers, subhanallah, that have not said one single word about the stock market, not the stock market generally, but some of the stock market and some of them mainly cryptocurrency. Now everybody's talking about cryptocurrency again, and the reason is because it's gone up to the moon again, 70,000 or whatever it is right now, the Bitcoin. So for that reason, stop and think about the bigger picture. Yesterday, no one was talking about it. Today, they're talking about it for a reason, because everybody is buying it now. So just ignore it. Stay away from it. Don't lose your money. And then have an exit strategy. This is important because you need to know when to exit this stock. So is it because it's gone down so much? Is it because you made so much money? Or is it because you want to hold it for the 10 years, 15 years? Because sometimes it's difficult. If you have a stock and you're like, should I get rid of it? But then make sure you have an exit strategy. Read it again. If it makes sense to get rid of it, get rid of it. Simple. And these are some of the things I look for. Okay. So my strategies, not everything. Okay. Basically, there's more to this, but these are some of the things I'm looking for. Is the company's revenue growing every single year? And if it is, perfect. Some year maybe it's down because of COVID, because of that. That's absolutely fine. But generally, is it growing? Is it organic growth as well? Is it because they're acquiring other businesses, or because it's just going up every single, because of organically growing, if you like. EPS growth, I want to see that. And again, when it comes to revenue growth and EPS growth, it depends on the industry and depends on the company. If it's Nvidia, you expect a high growth because you're paying higher multiples. If we're talking about Procter & Gamble and J&J, you're looking about that 5-10%. So you need to know that industry. You need to know the base of what's acceptable for these, new technology companies in technology sector, whatever, and the old companies that sell consumer staples, products, and so on. So you need to know the market. Then, does the company has a wide moat? Like I said earlier, free cash flow growth is very, very important. I want to see that growing every single year consistently. And if it is 1 or 2 years down, that's fine. But majority of the time, this should be growing every single year. And the reason I said that is because I want to be able to say, okay, the company has enough money to pay off the debt, to buy back their own shares, to pay me dividends, to acquire other businesses, and so on. There are a million things they could do with that free cash flow. I want to see that growing. And then that dividend growth outpacing inflation. The 5-year average, the compound annual growth rate of the last 5 years, I want to see that outpacing inflation. And if it is not, then of course, what is the point of investing in these companies? Now, I do have some companies that do not outpace the inflation right now, but overall portfolio should be heading that direction, if that makes sense. So these are some of the things I look for. Again, I'm looking for return on invested capital, return on equity. I'm looking for margin, profit margins, and the other things that I normally look for. But it's important, again, the company you're buying is cheap as much as you can and have these things in place. I hope this was kind of helpful video. It's slightly longer than I expected, but it is very important to remind ourselves why we're here, what we're trying to achieve here, okay, and thinking about the long-term plan. If you don't have a long-term plan for the stock market, you need to do that now, because that gives you your why. Why am I investing? What is the purpose of my basically investment? And then for that reason, then anything happens, you wouldn't worry too much about it. If the stock market crashes, 10%, whatever, not 20%, 30% tonight, I'm actually buying more. I genuinely will go and sell my car tonight if that happened and just put it in if I don't have the cash. I wouldn't do that, by the way, but you know what I'm saying. So hopefully this was helpful. If you'd like me to do this type of videos, kind of talk about maybe the general investment ethos and everything else around it, please let me know. We talk about stocks a lot because that's what I'm used to, what I've been doing, and the reason I started this whole portfolio thing is just to share my journey and to talk about stocks. But if you'd like me to do this type of videos, inshallah, let me know. Not this long, of course, and if you're still here, please give me that like, okay, because that really means a lot to me. Anyway, I'm going to stop the video here. As always, if you haven't joined us on the Discord, please do so. It really helps the channel. Have a wonderful day. Assalamu Alaikum.